if you look at where India is right now, the Indian companies are at right now, I mean, obviously you can't categorize all companies, in the same basket, and which is why you have the large caps, the mid caps, the small caps. But if you were to look at an overview for, say, the next 10 years, do you see equity delivering good returns? I know good is again relative, but if you could explain that let's take double digit, for example, over a 10-year horizon from here on, do you see equity, given India and the place we are in, giving good returns?
Absolutely. I think the expectations have got moderated because our nominal growth rates have come down from 13-14% to 10-11%. But it still remains the most attractive asset class. Mind you, your fixed income yields are already down to 6-6.5%, which means that the post-tax returns would be in the range of 5%. So anything which is closer to double digit is giving you a 3 to 5% alpha over long periods of 10 years. A significant amount of money. So as I said, if you have the appetite and your goals are more longish, which is upwards of 7 to 10 years, I mean, more the better. And we always keep telling clients that corrections are temporary, growth is permanent. So if you track Sensex for last 40 years, you have 70% of the years when index gave a positive return, and 30% of the years when index gave negative returns. So the risk reward is favorable as the horizon gets extended to 10 years and more. So I don't see a challenge in terms of double-digit returns being maintained. We can obviously see some intermittent volatility, which is integral to equity. And when the world growth is so anemic, and you are seeing, I think there will be a major disruption of supply chain and dislocation of economic activity, even when the virus gets contained, because now the dependency in auto, in pharma, in electronics is too high on China. So I think that would shift, and I think India should be one of the beneficiaries. To what extent, how much, I think that
time will tell. But over a long-term period, you still find the Indian economy or Indian companies having enough legs to give good returns in equity.
Right, and also our corporate profit to GDP, again, I'm coming back to the core valuation, is at an all-time historical low. We have seen 3 years of very depressed earnings. So when the cycle reverses, it will. Economic cycles, tend to play out over. So you will see even the corporate profitability pick up. So that should also help you. Eventually, the earnings have to catch up, along with the nominal growth. So I also see a mean reversion with a lag happening even on the earnings cycle as the economic growth picks up, which should give support the argument we are making of equity being attractive over 10 years.